AI servers are getting liquid-cooled muscle, and CrowdWise bets just hit a $1 billion cap. Robotaxis have rolled out, but let's just say they stumbled a bit. Capitol Hill is blacklisting foreign AI, and hidden share classes are deciding who really rules the market, all in just 1 week. From HPE's $2 billion Nvidia-powered AI pipeline to Thiel's $200 million Polymarket play, and Tesla's 8% stock bump in Austin, the DC AI ban is shaking things up. Plus, we're diving deep into Class A versus C voting power. You can't afford to miss a beat. Watch the full video to see how these seismic shifts could redefine profitability and power.
Hi, everyone. I'm Gary Broad from Deep Knowledge Investing. We work with hedge funds, family offices, registered investment advisors, and individuals like you to help you get better returns in the stock market. I'm here with our guest host today, Enrique Abeyta. He is the editor at Paradigm Press Group, where he has several publications, including The Maverick and Breaking Profits. And he also has his own proprietary trading software called Signal Trade Pro. Enrique worked 30 years on Wall Street managing billions in hedge fund strategies, and for the last half decade has focused on bringing that experience to everyday investors. Enrique, thanks so much for joining us today.
Absolutely. Happy to be here.
So, how you doing?
I'm good. I'm good. We had that crazy heat wave here, last week, and just glad that broke. But I got to tell you, I'm up here in the New York area. I'm in Connecticut, and it feels like summer didn't even start until like the third week of May. So I didn't even mind the crazy heat wave. I'm from Arizona, so it didn't bother me so much. But getting through the summer.
So I'm actually in Lisbon right now, where for the last few days it's been more than 100 degrees Fahrenheit.
I
Celsius,
heard.
I think that's like 12 Celsius or something like that. I don't know who can keep track. No, we're way over 30 Celsius, which is like this made up thing that they use here. I don't really know. I think it's like a fictional score thing. Maybe that's how they keep track of the soccer scores. Either way, it's been hot.
So do you have air conditioning where you are? Because like throughout like much of Europe, I spent a lot of time in Europe and especially in England, and they just don't have air conditioning almost anywhere. So it happens like 5 days a year that they have this heat anymore, and they're just like screwed. Like they can't do anything about it.
Yeah, so in the apartment where I'm staying, I have a good air conditioning system that's working, but none of the restaurants have air conditioning, which I
Yeah,
don't fully
yeah.
understand because like this is normal weather here. The other thing is there is that hilarious European tendency. If you ask for a drink with ice, you get like two ice cubes.
Yeah, if that. Yeah. So
Yeah. Although the one that's making me nuts, we were posting about this on X earlier this week, is you can't detach the bottle opener, the bottle cap.
So I will tell you that happened about a year and a half ago. I got used to it. I actually kind of don't mind it because I saw your note. I just spent 9 days in England. And I drink a lot of Diet Coke and while it initially annoyed me, I kind of got used to it. And then I kind of liked it because then like sometimes we were driving a lot. I would take a bottle cap and like when in my car, I'll put it somewhere in the car and then I can't find it. But now it was just like, okay, the bottle cap's right there. So I hear you, but you might like it after a little bit.
I don't know. I'm getting a little tired of poking myself in the face.
Yes, that can happen too. Uh,
All right. So, you ready to go with the five things?
yeah, let's rock.
All
So,
right.
look, let's hop into it. You got a bunch of interesting ones today. The first one, is a company that I followed for 30 years. Actually, at one point, had over $250 million short in one of my funds. Hewlett Packard Enterprises, teaming up with Nvidia on power AI servers. Why don't you jump into it, and then I'll share some perspectives that I have, having been one of the largest short sellers in the world in Hewlett Packard for the better part of 3 or 4 years.
I got to tell you, having $250 million short position in a tech company requires a lot of chutzpah. Anyway, so here's the news on this one. At its Discover event, Hewlett Packard Enterprise announced a new generation of AI servers built around NVIDIA's high-end Blackwell GPUs. Their systems include rack-scale configurations like the GB200 NVL72. Take notes, that is going to be on the test. Those rack scale configurations are liquid cooled. They're designed to handle trillion parameter AI models. There are some smaller, less expensive versions as well. The key news here is that these all depend on Nvidia AI computing. And so what it does is that it embeds Nvidia's solution into everything HP is doing. These systems are targeted at enterprise, sovereign, and cloud computing provider customers. And the platforms are trying to simplify deployment of AI workloads, which is actually something that makes a lot of sense. To give you a sense of the scale here, HPE reported over $1.1 billion in net AI server orders, just 4 times Enrique's previous short position. And the pipeline here totals $3.2 billion. There's pent-up demand. And when you take a look at the written version of the 5 things, there's a chart here showing expected growth in this. Sorry, I said expected growth. I actually meant historical growth. The numbers here are just jaw-dropping, the amount of increase in AI usage here. So, Enrique, what are your thoughts on this partnership between HPE and Nvidia?
Well, look, I think it's very interesting. People maybe don't understand enough the dominant or large position that some of our legacy technology companies like IBM, like Hewlett Packard, have in technology implementation for larger corporations. And so I think that there's an opportunity for this to be great for HPE stock, but there's a big problem, and that's earnings revisions. So, IBM has been an absolute superstar stock. I mean, I'm looking here at the chart. IBM's gone from 120 to 290 since 2023. But the reason, and IBM I had over $500 million short, by the way, back in the day. I was a pretty big short seller.
But not the last 2 years.
Yeah, no. So the nice thing was that being short, this is 10 years ago. It was IBM and Hewlett Packard. They're big, they're liquid, they were at negative earnings revisions, and it's not like they were going to get bought out any day. Anyways, with IBM, what happened for IBM is the negative earnings revisions stopped. And so earnings went for this year only from 1030 to 1090, and the stock doubled. Okay. Now, there's other things going on there, but the problem for HPE is I'm looking at the same chart, and earnings for this year have gone from 235 to $1.80, right? So they've dropped 20-30%. So the most recent earnings revision was a positive one. I'm going to tell you something. If HPE can translate this into positive earnings revisions like IBM, I see no reason why the stock can't do fantastically. And by the way, when I look away, I'm looking at my Bloomberg. And to put this in perspective, hold on, this is amazing. The multiple on fiscal year 26 for HPE is 9.7 times EPS. The multiple on IBM is 25 times. So what I would say is this is a good start. I would watch the earnings revisions like a hawk, and it might take them 1 or 2 quarters. You haven't missed anything. They're going to report again on September 4th. But if they can pull an IBM, this stock's a double or a triple. If they don't, it's dead money. It's all about the earnings revisions for this company, in my opinion.
All right. So here's my interesting follow-up for you on this. Given that I don't know that there's anything particularly special about the HPE racks, and yeah, sure, there's a legacy business there. But the big news here is it's NVIDIA's architecture, the Nvidia Blackwell chips in these. That's great for NVIDIA, right? The more they are embedded in these big legacy hardware producers and distributors, the better off NVIDIA is going to be. But you have to figure it's going to cost HPE something on the margin side. So there's a possibility we could see a lot of revenue growth here, but not necessarily as much earnings growth as margins get compressed and NVIDIA grabs a gigantic share of the shared profits.
I think it's a great insight. And this is why when I was a younger investor, I spent a lot of time predicting and trying to position before the weight of the evidence. And I became a much more successful investor when I decided I was going to wait for the proof to begin to elicit itself. And the quickest thing I can say there is if the earnings revisions do come through on HPE is a better buy at 25 than it is at 21 today. Okay. 20% higher, it's a better buy because that's a better chance that it's going to 50. And so, like, I think, like you said, the proof is in the pudding. We gotta see it play out. And if it's there, then HPA can be a great stock.
Enrique, let's take a minute here for some investor education because you said something that's really important. It's a conversation I have with the DKI interns, some auction cash in all the time. Sometimes I'll tell them, hey, go research something, come back to me, let me know what you think. And what they'll do is they'll say, okay, do you want me to write up a report? What kind of conclusions do you want? And I say, guys, stop. Do the work, do the research, then let's look at the data, let's look at what we find out, and then we're going to make a decision, right? It's exactly what you said. Don't decide in advance. You wait as long as possible to decide what you're seeing.
Well, and I'll throw another data point out there. There's 4,000 liquid companies in the U.S. stock markets. Why own companies with negative revisions ever?
Right.
Like, when you can find companies that have positive revisions, when you can find companies that just went from negative to positive, if you can't find a company that just went from negative to positive revisions in 4,000 stocks, the problem isn't the market, the problem's your process. So, we are very results oriented. In many ways, we are quick reactive as opposed to predictive. And, that's been very successful for us.
Good.
So let's go to this next one that you have here. This one I find fascinating because I have a really interesting insight on this one, a little differentiated. You wrote prediction markets go mainstream. Peter Thiel has invested $200 million in Polymarket, the blockchain prediction market, valuing it at $1 billion. So jump into it. Tell us what you're thinking here.
All right. So first of all, for the people who don't know, Polymarket and their competitors, Kalshi and Predictit, what they do is they provide the markets with the wisdom of the crowd probability kind of thing. And you can go bet on all kinds of outcomes. So, when people think about betting, they think about going to Vegas and, a roulette wheel or poker or blackjack, or, you may think about sports betting. You bet on one team to win or cover the spread, something like that. These prediction markets will allow people to bet on things like who's going to win an election or who's going to win a primary, or whether the Federal Reserve will raise or lower interest rates, or whether we're going to be in a war or a war will stop by a certain date. And so what's really interesting about all of this to me isn't so much the fact that people get to wager on all kinds of stuff that previously they couldn't wager on. The thing that I find interesting about it is all of the data in terms of what the odds are, how many people have bet, the size of bets on each side, the size of relative bets, right? Not just we have X number of dollars bet on one side and Y dollars on the other side, but are these big bets? Are they small bets? Is the big money betting one direction and lots of smaller people in the other? These are all things that you can use to get a sense of what people think is going to happen. Now, for certain things, I don't really care, right? I don't care what the majority of people think the Federal Reserve is going to do. I'll have my own opinions on that. But these kinds of things can be very valuable in terms of elections, where these prediction markets tend to be a lot more accurate than our pollsters have been for the last few election cycles. So basically what these platforms do is they give people the opportunity to make all kinds of wagers, but for the rest of us, we get to sit and collect information from it. And this information, I promise you, is a lot more valuable than knowing if somebody's going to bet black or red on the next roulette spin.
Yeah, I think all that's true. And I'm going to just give you even another thing that I think is happening here, which I call the gamification of everything. What I like about Thiel's investment, I think Robinhood is going to buy one of these things for $2 billion. I mean, Robinhood's hitting new highs today. Market cap of Robinhood just hit. We've been huge fans of Robinhood. We recommended it to readers at like $20 a share in November. It hit 93 today, $81 billion market cap, 82 billion. But what I think is interesting is that we're beginning to see this ability for traders, consumers, etc., to essentially stake a bet on just about anything out there. So if anyone here is a sports betting fan, I'm not a big participant, but like sports betting is ridiculous. Like DraftKings, it's like, okay, is the next pitch going to be a curveball? Like you can bet on that stuff. I'm not here to make a moral statement about whether that's good or bad for society or any given individual. I'm just saying it exists. we're going to see, in my opinion, I mean, unless there's some big regulatory thing, the same thing happen, not just for stocks, but for politics, for any number of things. I mean, the big thing with Robinhood today was they've announced tokenization of stocks. So you can buy a token that represents a stock, which kind of seems like the stock. I don't know. It's a little confusing. But I think that these markets, when we talk about these prediction markets, there's something they are today something that people kind of know a little bit about. I think in 10 years, we're going to be, ESPN runs the betting lines on NFL games on the screen while you're watching ESPN. I think in 5 years, we're going to see, whether it's Kalshi or Predicted or Polymarket, the betting lines on stuff being run on CNN. Where they're going to be saying, hey, this is what's going to happen next. So, I think that this is just something that it has some great investment value, but this is a change, an evolution that I see happening that's going to be part of everyday life for any investor.
Well, here's a thought for you, right? Frequently, Wall Street, we are on the edge of our seats for an employment report or for a sales report, right? All kinds of economic reports. Do you want to bet on the Bureau of Labor Statistics getting it right or millions of Americans making bets on what they're seeing? So, for instance, I would take, if we're looking like at a retail sales number, I would take a Kalshi or Predicted bet over the Bureau of Labor Statistics to get it right. And you get that information a whole lot faster. So that's one way to think about it. But let me ask you a question about your prediction, which I think is a really interesting one. You're saying that Robinhood could potentially buy one of these markets. Now, I know you're not, putting a time frame on it, but I'm wondering if you've thought about the regulatory aspects of it, because obviously stock trading is highly regulated. And for a lot of these prediction markets, at least at a minimum, in some of these platforms, US citizens are not allowed to bet, or at least not allowed to legally bet. So would there be regulatory issues with Robinhood trying to run a regulated trading versus a prediction market in the same platform?
I mean, call it a crypto token, and no. I mean, the Trump administration has walked back from literally every piece of legislation. I mean, I'm going to say something funny. As long as Trump media gets a cut, I don't think it'll matter. And I'm not being, that sounds super cynical, but I'm not really. Like, look, some of the things that the Trump administration has done in crypto are absolutely the most disgusting things I've ever seen in 40 years of looking at politics. Okay. And by the way, I'm a big fan of a bunch of other stuff that Trump has done. I think we are in a regulatory environment for the next 3 years where all those bets are off. And I'm not kidding. If Robinhood were just to tokenize it, you probably could get away with it. So I think if it was ever going to happen, it's going to happen now. And then the question becomes, if there's a new administration or what have you, do they step it back? I don't think that'll be the case. I mean, this is going to go way back. People don't remember that, like, interest rates on credit cards were highly regulated and you couldn't actually charge interest rates the way people do. And then the interest rates got crazy and then we had pushback. This is the way that financial regulation goes. So would it be regulated? Absolutely. Will that regulation have any impact? I don't think in the next 3 years. Like I said, if Trump's can make some money off it, they'll figure out a way to make it legal.
I'll tell you what, you know who the guy is who's really well positioned to benefit from something like that? Michael Guyad. He just launched a new ETF focusing on deregulation, focusing on companies that will benefit from deregulation.
Well, Robinhood would be right there. So, and Polymarket if it were public, but maybe there'll be a token on it soon.
There you go.
So let's go into the next one. This one's a personal favorite of mine because I have a story. Something happened in the last 10 weeks that changed my life forever, and it has to do with this story.
All right.
Last week, the much vaunted Tesla Robotaxi finally launched after years and years and all this. It launched with 10 taxis, whatever the hell it was, and I don't know how big a thing it was in Austin, but let's hear your take on Elon Musk's massive Robotaxi announcement and little rollout.
Yeah, exactly. So first of all, I think you've got this nailed. This is something that has been discussed for somewhere in the neighborhood of a decade, and it was always right around the corner. Friends and I were betting on what would happen first, actual robo-taxis or a Japanese integrated gaming resort, right? Because all of those have been about to happen for the last decade. Anyway, But credit to Tesla. They finally got their first on-road robotaxi trial, and some of it went well. There were some issues, and I don't know that those issues are necessarily a problem. I think Elon Musk, he has a great attitude for things like this. He's great at saying, well, he kind of has that Thomas Edison, yeah, we found problems, now we're going to fix them, right? And I think he's great at using these kinds of trials, the failures in trials, the difficulties that they find as ways to improve and get better really quickly. Good for him on that. The one thing that I do have some questions about is what's going to be the future of these different models. So, Tesla is using this low cost camera only approach that might scale faster and cheaper, but rivals are using things like LiDAR, radar, there are all kinds of safety glitches. And depending on the weather, depending on conditions, some of these more expensive systems, from what I've read, may be better at seeing a little further into the distance, at identifying problems. I'm not sure that the camera only approach is going to work, and I'm not sure how easy it will be for them to fix it. That said, let's give them credit. They actually got this thing rolled out and they used it and everybody lived, and they will fix the problems.
Okay. So here's a perspective. I'm not an Elon Musk hater nor a fan. He went to school with me. He went to the University of Pennsylvania at the same time I did. We were both in the college. We didn't know each other, hung in different circles. I respect what he's done. He's obviously been very successful, but we're here in Connecticut, and my girlfriend and I, we need to buy a second car. So I was looking at what to buy, and I said, well, maybe we should look at a Tesla. And the reason is that, number one, and this is going to come to full self-driving in a second. Number one, everyone I know who's ever owned one raves about them. Number two, we had borrowed a friend's hybrid, and it was really nice to not have to deal with, as much gas. And number three, everyone hates Tesla, and I'm a value buyer. So, the market's flooded. I was like, oh, Teslas are cheap and everyone loves them. So we bought it. We bring it home, actually my girlfriend was away, so I had to deal with it. Like, I have a fun Jeep or whatever, but I'm sitting in the Tesla maybe a day after, and I'm like, oh, wait, this thing has full self-driving. Wow, I'm going to give that a shot. So I pull out of my driveway and I just throw it right on. I'm going to the gym. It's 15 minutes away. And I go, I did a little bit of reading to make sure that it was, I said, I'm just going to do this. I'm not going to touch the wheel. And it drove for the next 15 minutes to my gym. I did not touch the steering wheel. I did not touch a pedal. Mind blown. Like, it just, so a lot of people listening may have been in a Waymo, but until you experience it from the driver's seat, you have no idea how game-changing this is. And I will tell you, I use it all the time. We got to go to the city all the time. My daughter and I were going to a Yankees game. It's a 2-hour commute. I basically got in the car. My 8-year-old daughter and I did not touch the wheel past my driveway for 2 hours to get to New York. Didn't touch a wheel. You got to look straight ahead. You can't multitask or anything, so you got to pay attention. But I'm on the sawmill, which goes like this. Our kids, my youngest daughter's 5 years old. When she's 20, she's going to have a conversation with me. She's going to say, Dad, wait, you used to drive the cars? Like you use the wheel, or the ones that have wheels. And why would you do that? That's so stupid. Like, it's dangerous. Like, you're not as good as the AI. Like, who in God's holy earth would ever do what you're talking about?
She's gonna think you're Fred Flintstone with blistered feet.
Well, yeah, exactly. She's gonna be like, you might as well have a telephone with a cable that goes into the wall, or you might as well get your news from a piece of paper. Like, who would do that? I'm telling you, there is a aha moment coming with FSD in the next 18 months, where you come to the States. We'll come up. I think you're down in the New York area too. Like, we'll go for a self-drive. It's a game changer. I looked it up today. 93 billion hours are driven by Americans in a given year. Let's say we get half of those back, 42 billion hours. So people talk about AI and the impact, and like, oh, we can write a term paper. Oh, it can book my flight. Screw that. 42 billion American hours will come back in the next 5 to 10 years. What does that have an impact on society? So here's my point. We could go back and forth. Google, Tesla, etc. This is the single biggest technological change happening since the internet. And I think it's going to change everything. It changes the narrative. And so everyone says, oh, yeah. I want to drive my own car. I will never do it. Trust me. I remember when people had Blackberries and we needed a keyboard for our phone. I could never have a touch screen. We're all going to look back in 10 years and just be like, what the heck were we doing driving our own cars? So I understand there's negative earnings revisions at Tesla. I've never actually recommended Tesla stock in my entire career as a newsletter writer. Never been. I think we're almost there. So I will say this robotaxi thing. If there's one thing that people can do, go get in an FSD and find out who has a Tesla. Drive it with them. It will change your perspective. This is the biggest thing that's going to happen in the stock market. And then AI will only really be important for most people because of FSD.
Well,
I know that sounds crazy.
Next time I'm back in the US, we will go for an FSD drive in the Tesla. I will look forward to that. But I'm going to tell you something. I am never giving up my E46 M3 with the manual transmission.
Everyone says that. We're going to see.
Come on, rolling through the gears in a real internal combustion engine. It is fun.
So it's going to be the same thing where you read a magazine, but you get 95% of your news off the internet. Okay, so old people can still enjoy it. So let's go to the next one. They're talking about the Trump administration, the No Adversarial AI Act, which basically would outlaw things like DeepSeek. I mean, when we say foreign AI, it strikes me we're really saying Chinese AI because I haven't heard of anyone else's AI and I don't think I'm going to. Where they would say that basically, a la TikTok to a certain extent, Chinese AI would not be allowed to be used in the United States. What are your thoughts on this, Gary?
So first of all, I think the act specifies that we can't use any, or the US government can't use any AI that originates from countries like China, Russia, and Iran. I think you've got it nailed. It's China, Russia, and Iran. Yeah. Iran doesn't have their own AI model, right? So, okay. I have two thoughts on this. First of all, as critical as I typically am about just government in general, let alone our government, this is the least crazy thing I've ever heard in my life. It actually makes a whole lot of sense, right? Do we really want to give the Chinese a backdoor into everything our government is doing? This actually makes a lot of sense. It'll be interesting to see if it gets bipartisan support or if somebody will find a way to be upset about this. The other thing is, I think it's really important to understand the kinds of things that China is doing to make our lives precarious and how important it is that we decouple a whole lot from them. So just as an example, DeepSeek, we all got really excited about it just last January. That was 5 months ago. And it's already been figured out that DeepSeek relays user information to the CCP, that's the Chinese Communist Party. These are reasonable fears, right? You have to assume that anything you put on DeepSeek or any Chinese AI is going straight to the Chinese government, right? And someone watching this might say, well, what do I care? I don't have any secrets. I don't care if the Chinese know what I'm doing. Okay, but that doesn't mean the government should be doing this. We shouldn't have these kinds of leaks. The other thing is that we were talking about this just a couple of weeks ago. Enrique, did you see the news where China was putting kill switches and other spyware and damaging equipment in solar panel inverters? The equipment.
I heard something about it. I didn't read it, but yeah. Okay,
so basically, if you're buying solar panels, you are buying Chinese equipment. If we're using them on an industrial scale, that the equipment that's used to connect those solar panels to the grid, the Chinese hid communication devices in there and various other measures that they could use to damage or cripple our grid. People talk about the importance of having, this relationship with China, doing business with them. When you are doing business with people like this, you really need to think about decoupling. And I certainly understand a lot of people are saying, oh no, it's going to lead to inflation. Oh no, things will cost more. Listen, I hate inflation. I hate things costing more. But there are costs to doing business with people who are trying to harm you that are just not being discussed or evaluated by serious people. I'm going to give the US government credit here for looking at this, identifying this as a weakness and saying, let's head this off before it becomes a problem.
Yeah, I couldn't agree more. The Chinese are not our friends. The Chinese have been laughing their, excuse my language, asses off at the West for 25 years. They have the Chinese are the friends of the Chinese and no one else. They have their interest in mind. They don't really care about the globe other than it helps them. And by the way, we could say probably a lot of these things about America in certain ways, but the difference is they are very active promoting that as a plan throughout all of their operations. You know, we could talk about rare earths would be a really fun one to go through and deconstruct that. But, you know, it comes back to the whole TikTok thing. Like, yeah, people say, well, you know, who cares about my information? That's fine. But you know what? You'll survive without TikTok. It's not going to change your life. As much as you love TikTok, you'll just go on to Reels. You didn't have TikTok 5 years ago. You know, so to me, it even becomes a little bit more simple. Like, do you really need the Chinese AI? Like, because we don't have a bunch of really great AI programs, and so you're not going to be able to survive with it. And so if we know they have a back door, and we know they do, why even bother? Why is this even a question? Why is this even a debate? Because I'll tell you what you can't get in China? Facebook. Right. And YouTube and Google and American AI. So I fail to understand constantly why we are allowing their products here that they do not allow there. You know, it doesn't make any sense. Where is the benefit? And especially when we get into things like TikTok and DeepSeek, like we could talk about inflation. Okay, you like your $30 Christmas tree, and now it's going to cost you $60. That's a bummer, you know, and that's real money. Okay, but TikTok, DeepSeek, come on, give me a break. Like, right. and Americans need to start thinking about. And I'm not a Trumper. I have the things I like and things I'm absolutely disgusted by. But we need to start thinking about American interest in protecting them and give the Trump administration credit. And by the way, give the Biden administration credit too. Gradually, these administrations on both sides and the Dems and the Republicans have been waking up to the fact that China is not our friend. And so, you know, small sacrifice, you can't use some crappy, cheap AI program. You're going to be just fine with Gemini and ChatGPT and 100 other things that we've got out there. So get over it. I'm a big fan of this move.
You know what? So the thing I would add to it, I agree with everything you just said. The thing I would add to it is when you're saying, do we really need this? You didn't have it a few years ago. Beyond all of that, do you want your 12-year-old being programmed by the CCP? Right? Do you want your elections programmed by the CCP? Right? There are costs here. And I think you said something really important, right? You're talking about what's in our best interest. And it's just one person. But I had the most fascinating conversation a couple of weeks ago in Lisbon. I was walking with somebody by the river here, and she was talking about various policies of President Trump that she didn't like. And so, you know, I'm just listening. Interesting to get her point of view. And I said, you know, so what's your impression? She said, oh, I like him. And I said, okay, you were just very critical. Help me understand why. Why do you like him? She said, because he has America's best interests at heart. She said, because he's trying to do the best for his people, and our politicians should try to do the best for us. And it was a really interesting, astute observation. Now, for those of you listening to this, maybe you agree, maybe you disagree, but the point that Enrique's making is we should have our own best interests at heart. And that, you know, that was something that had come up in a conversation that I was having here just a couple of weeks ago. I thought it was a really, it was a nuanced take from a European looking at American politics.
Well, and I'll throw one last thing into that too, is that the Chinese aren't the Europeans' friends either. No. Like the Chinese are in the process of absolutely devastating the European auto market with essentially subsidized EVs. Right. And it's just going to be, they're going to be tens of thousands of jobs lost in Europe if they don't step up, and they're not coming back. And they're good, important jobs. And so someone has a $25,000 Euro really cool BYD car. This is a $35,000 locally produced car. Okay, well, that's $10,000 and 20 years of jobs that aren't there. So, you know, again, and that's fine. If we just acknowledge they're not our friends, we work with people all the time and have very productive relationships, even though they are quasi-adversary. So, Okay, so we're going to finish up with this last one. I think this is one you usually do with the interns, so I'm kind of the opposite of them.
Exactly.
It's the education moment where we're going to talk about, different share classes. And, I think most investors, but a lot don't know that there are major public companies like Google, like Meta, that have these different share classes. I know you're going to go through it, but where most often entrepreneurs and founders are able to keep control. I've been a huge investor with John Malone for many, many years, talking about multiple share classes. He probably has issued more share classes than the NYSE has issued in the entire last 30 years, just by himself and his companies.
Usually with 5 or 6 letters in them.
Yeah, exactly.
LBTYA, LBTYB.
Yeah. let's get your take here, Gary.
All right. So I don't think I have a take on this. I just think it's important to help people understand what these things mean. So there are all kinds of different ways of splitting up share classes. They typically are done along the lines of voting rights, not economic rights. So if we look at Google or Alphabet, but let's just call them Google because let's just call them Google. They have 3 different share classes, A, B, and C. Now, each one of these 3 share classes have the same economic rights, but they have different voting rights. The Class A shares, GOOGL, they've got 1 vote per share. Okay, good enough. The Class B shares don't trade. They're owned by the founders. They get 10 votes. They get 10 votes for every one of yours. The Class C shares, GOOG, has no voting rights. And the reason for the structure is it gives the founders the ability to hold the majority of the voting power, even with a minority equity stake. The other thing that's really important to understand is a lot of times stocks will trade more based on liquidity than they will off of voting rights. Most people don't care that much about voting rights. And I've seen plenty of situations where the share class with lower voting rights may trade at a premium to the share class with higher voting rights. And you think, wait a minute, why would you pay more for a lesser say? And the answer is most people don't care about voting rights, but they do care about liquidity. They want to be in the place where if they want to sell, they can sell quickly. A couple other examples, Berkshire Hathaway. They had a situation where Warren Buffett refused to split the stock, and the share price of Berkshire Hathaway got so high, this is before you could buy fractional shares on Robinhood, that a lot of people who wanted to invest in the company could not afford 1 share. They didn't have tens of thousands of dollars to buy a share. And so what Buffett did was he issued a B class, which was, I think it was 1/30th the size. And so, you had a lesser economic interest, but it was a lesser price. And basically it was a way for people to participate who didn't necessarily have so much money. Now, the best example of all this is the one Enrique just brought up, where John Malone, who was typically a media investor, would do all kinds of creative things and split up different share classes, and he would have these tracking stocks, and he would have businesses where there'd be the whole business, but something was potentially sort of quasi spun out, and you could invest in a part of another business. And when he would do this, Malone would make sure he maintained control. But because he really was great when it came to dealing with his shareholders, he always managed to create a way for individual investors to align their economic interests with his. And if you did that, you tended to do really, really well. And that was the thing that made John Malone such a good CEO. It's that no matter how convoluted his share classes became, he always gave the average investor a way to align your interests with his, and then you do well. And he wasn't going to do well at your expense. And I always think he had integrity for doing that. Enrique, it sounds like you've had a lot of experience in these areas. What have you seen?
Look, I think you've covered most of it, so I'm not actually going to say that much. I'm just going to say 2 things. Very simple. Number one, companies that have multiple share classes have actually outperformed companies that don't have multiple share classes. Right? That's just an empirical fact. Google, Meta, 27 Malone companies. I could go into all the reasons why that is, but I'm going to give you the number one reason. Okay. There is so much in investing that the smart money wants you to focus on. Insider buying and selling, percentage dividend payout, class, multiple share class. It's all noise. They're trying to sound smart, so you give them your dollars for them to manage and them to get paid. You can ignore all of it. Focus on one thing. If there's only one thing you focus on, growth. If a company has $1 of earnings and that's going to $10 in earnings, that stock is going up. So when we look at these multiple share classes, these are companies that have been some of the best stocks in the history of the stock market. It didn't matter there were multiple share classes. What mattered is Meta went from making no money to making $20 billion. The same thing with Google, same thing with all the Malone companies. So tune out the noise. In general, there's only 3 to 5 things that matter for any given stock. And the first one is growth. Just be very, very careful when the smart person comes to you and say, oh, well, there's all these different voting share classes and blah, blah, blah. They're just trying to get themselves paid. Stick to the basics. Find good to great companies, get them at a good, reasonable price, and buy things that are going to grow, and you're going to change your financial future.
You know what, Enrique? I think this week's educational topic had 2 different lessons in it. That was great.
I didn't mean to do that, by the way. That was just like...
That's terrific. I think it's a great primer for people on the most simple, basic, accurate way to think about making money in the stock market, right? It doesn't have to be that complicated. And in fact, a guy who summed it up well, this was 25 years ago, Joel Greenblatt, right? The little book that beats the market, right? Basically saying there are all these complicated things, here's how to view them.
Yep.
Right. And usually it just comes down to find good businesses that are growing. That's always a safe thing.
Keep it simple. Like, it's hard. The world's hard enough, but a couple simple rules can get you there. And that's one of the things we emphasize to all of our readers.
All right. So Enrique, this has been great. I'm so glad to have you as a guest host again. Thank you for returning. How do people find you?
I'm on X Twitter, Enrique Abeyta. It's all up there. And then if you go to Paradigm Press Group, or, we didn't talk about it. You shared the URL. We have our own trading software that has incredible hit rates, huge alpha, huge, like a 50% annualized return. We're actually launching version 2.0 in about 2-3 weeks here. This is like the culmination of all my work for 30 years. I work with a computer programmer who also went to school with Elon Musk and was in some of his, I believe he was in some of his classes, and that's the big focus there. So they can get access to that. Paradigm Press Group, Enrique Abeyta Twitter, X Twitter, Paradigm Press Group, and Signal Trader Pro. And I think he shared the URL with everyone on the call today.
All right, terrific. I'm going to get us wrapped up here. Big thank you this week to DKI's interns, Cash and Crow and Samak Jain. Fantastic work by those guys. So much of the work that you guys see and enjoy here is based on research that they've done. So great job by the young guys. Also want to thank the team at Flying V and especially Enrique for filling in as a guest host. Always great to be talking to you. For those of you watching this, we know your time is valuable. Thank you so much for spending it with us. If you want to give us a like and subscribe, that would be great. But hey, do what you want. We're not the boss of you. We'll see you guys next week.